imaginary figure cannot be called as an entity. It should have its own individual existence. So here, business transaction can be classified into two types: cash transactions as well as credit transactions. The stock contains raw materials, semi-finished goods as well as finished goods which are unsold in nature. So when we purchase something, so if the price is less than the actual price, so that is known as what? Discount. Hello everyone, welcome back to the second session. I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysore. My dear students, in the previous session we have discussed what are the career opportunities in accounting. So being a commerce student, so what are the career opportunities as well as what are the courses which has been offered being a commerce student? That is, if you take accounting, what are the career opportunities in accounting? So that we have discussed in detail. In today's session, we shall continue with new topic. Let us see what are the new accounting terms that are being used in accounting. So certain terms you are familiar with it. There are number of terms to be learned by you. So let us see what are the new terms that are being used in accounting. So if you see the first term, that is business entity, or we can just call it as entity. Now what do you mean by entity? So if you see this picture, there is a club, there is a corporation, there is a limited liability company, there is a cooperative society, there is a sole trader, there is a partnership firm. Now if I just tell A Limited, so A Limited is what? It is just a imaginary organization what I am speaking about. But what is this entity? Entity means a thing that has an individual existence. For example, if I tell State Bank, if I tell State Bank of India, now this is one of the famous bank, right? And this has its own individual existence. Now A Limited, we don't know which A Limited it is. So I am just telling it is an imaginary organization. State Bank of India, we know about it. So it is one of the famous bank where it has its own individual existence. So here in accounting, if we speak about entity, so entity means what? It should have its own individual existence. Then only it is called as what? Business entity. So an imaginary organization or an imaginary figure cannot be called as an entity. It should have its own individual existence. Hope you are clear with the first term, that is entity. So what is entity? Entity means a thing that has an individual existence. Now coming to the second one, let us see what is the second term is all about. That is business transactions. Of course, we are going to see the activities, or we are going to call the activities of the business as business transactions. Now what is this business transaction is all about? So it is an activity involving the exchange of money or money's worth between the persons. Now what do you mean by business transaction? So it is the activity. So in an organization, there will be purchase of goods, there will be sale of goods, there will be receiving of cash, as well as there will be payment of cash. So all these activity which is relating to money or money's worth, or which is having a certain value which can be measured in terms of money. So those activities are called as what? Business transactions. So it is an activity involving exchange of money or money's worth. So it should be measured in terms of money. So that activity, for example, purchase of machinery. Suppose purchase of machinery worth rupees 50,000. Now, this purchase of machinery worth rupees 50,000 is measured in terms of what? In terms of rupees, right? So it is called as what? Business transaction. So it is also one of the activity because we are purchasing that machinery. So purchase of machinery is what? It's an activity where it is measured in terms of money. So that is known as what? Business transaction. So it is an activity involving exchange of money or money's worth between the persons. So here business transaction can be classified into two types, cash transactions as well as credit transactions. Now what do I mean by cash transactions? For example, if the activity have taken place and the payment of cash is made immediately, that is called as cash transaction. Let us see what is cash transaction is all about. Cash transaction is a type of business transaction where cash is paid or received immediately. For example, I have purchased a car and I have paid rupees 5 lakh immediately. So what it is called as? It is called as cash transaction. Suppose I have purchased the car but I have not paid the amount immediately. I am going to pay after 2 months. Then what it is called as? Credit transaction. Why it is called as a credit transaction? Because the cash is not paid immediately. So it is called as credit transaction. So cash transaction is a type of business transaction where cash is paid or received immediately is called as cash transaction. Then what do you mean by credit transaction? Credit transaction is a type of business transaction which creates an obligation to pay or receive the amount later. In the sense, the amount is not paid immediately, but in future they are going to make the payment, or in future we are going to make the payment. So such type of business transactions are called as credit transaction. Hope you are clear with business transaction as well as cash transaction and credit transaction. Now what do you mean by business transaction? The activity of the business which takes place in terms of money or money's worth is called as business transaction. It can be in two ways. One is cash transaction and the second one is credit transaction. Now what do you mean by cash transaction? It is a business transaction where cash is paid or received immediately. That is known as cash transaction. Whereas credit transaction, in the sense here cash is not paid or received immediately, but there is a obligation to pay or receive in the later date. That is known as credit transaction. Now moving on to the next term, that is capital. Now what do you mean by capital? Capital refers to amount of money or money's worth. That is goods or asset invested by the owner in the business is called as capital. Now while starting a business, of course it requires huge amount of money. So the amount of money which is invested by the owner in the form of cash or goods is called as capital. So the earlier amount which is invested in the business, it may be in the form of cash or it may be in the form of goods. So that amount is called as what? Capital. So what do you mean by capital? Capital refers to the amount of money or money's worth, in the sense which has certain value which can be measured in terms of money, that it may be goods or asset invested by the owner is called as capital. Then the formula for capital is equal to assets minus liabilities. So we shall later learn about assets and liability. Time being, you remember capital means the amount of money or money's worth. Money's worth in the sense which has certain value which will be invested in the business by the owner is called as capital. Now moving on to the next one, let us see what is drawings. Now here we are going to learn that the firm, that is the organization, and the owner are two different entities. They are not one and the same. For example, A Limited is a company. Now A Limited is a company and A is the owner of that company. Now A Limited is different and the owner is different. They are not one and the same. There are two different entities. So whatever the profit which is earned in A Limited, it is the profit of A Limited, not that of A. A is different. Suppose, as I told you, now there are two different entities. They are not one and the same. Suppose A is in need of money and A withdraws certain money from the business. He withdraws certain money from the business for his personal use. So that amount or goods which is withdrawn by the owner for his personal use is called as drawings. Now what do you mean by drawings? Drawings refers to cash, goods or any other asset. So it may be cash, it may be goods or it may be any other asset withdrawn, that is taken away by the proprietor, that is by the owner from his business for his personal or private or domestic use is called as what? Drawings. So here I have clearly told you, here the entity as well as the owner is totally different. They are not one and the same. Suppose if the owner is in urgent need of money, he can withdraw certain amount from the organization for his personal use. So that amount or the goods or any other asset which is withdrawn by him for his personal use is called as drawings. So clear about drawings? So drawings is the amount, cash or any other goods or asset which is withdrawn by the proprietor or owner of the business for his personal use is called as drawings. Now let us see the next term, that is assets. So let us see what is this asset is all about. So it is also one of the important common term which is used in accounting. Let us see what is this asset. So asset are economic resource of an enterprise that can be usually expressed in monetary terms. So for example, if you see this picture, there are number of assets, like there is a house, there is a building, there is some cash, there is a vehicle, so there are certain documents. So these are all what? These are all assets. So asset means what? It should have certain value. It should have certain value in the business, that is called as what? Assets. So assets are economic resource of an enterprise. So these are all what? It is a economic resource which contains certain value. Economic resource of an enterprise that can be usually expressed in monetary terms. Now if you see a car, so we can assume the worth of the car. So for example, the worth of the car is 10 lakh. So here what it is? Car is an asset. It has certain value. It is measured in monetary terms, that is rupees 10 lakh. So it is what? It is an economic resource which has certain value in the business is called as asset. Assets can be broadly classified into two types. Let us see what are the two types of assets here. Fixed asset. Now what do you mean by fixed asset? Fixed assets are assets held for long-term basis. For example, building. Now the organization will purchase a building. Of course, the building has an individual existence. Now they are going to purchase that building which has certain value and can be measured in terms of monetary terms. Now they are going to purchase that building. Now whether that building will be purchased often and often? No. For example, in a school, they will purchase some furniture. Whether they are going to purchase the furniture often and often, every year whether they are going to purchase? No. So furniture is what? It's an asset for the school. In the same way, for an organization, in order to undertake the activity, they have purchased a building. So every year they will not change that building. So that building is what? It is a fixed asset. In the sense, they have purchased it for long-term basis. For the longer duration, they have purchased that building, that is known as what? Fixed asset. Then what do you mean by current asset? So current assets are asset which is held for short-term basis. For example, cash. So here cash will be keep on fluctuating, right? For example, if you purchase a building, so here after so many years we will purchase another building, so we will not purchase often and often, whereas in case of cash, so this cash keeps on fluctuating, so it may increase, it may decrease, so it keeps on fluctuating. So what it is a current asset. So current asset is what? These are the asset which is held for short-term basis are called as what? Current asset. Whereas fixed asset, it is for long-term basis. Hope you are clear with the assets. So assets means what? It is an economic resource which has certain value in the organization and it should be measured in monetary terms. There are two types of asset, fixed asset as well as current asset. Fixed asset is for long-term basis, whereas current asset is for short-term basis. Next, liability. The next term is liability. So the term liability is derived from the French word lier, which means to bind. So here the liability is derived from the French word lier, which means to bind. So literally liability means claims of outsiders against the business concern which bind the business concern to others. Now, in simple words, liability is nothing but the amount to be paid to the outsiders. For example, suppose I have to pay rupees 10,000 to some other person. So that is known as what? Liability. In a sense here, if you see an organization, now if the organization wants to pay some amount to the outsider, so that amount is called as what? Liability. So liability is nothing but claims of outsiders is called as liability. So of course, in an organization, assets as well as liabilities are very common in an organization, and the total of assets should be equal to total of liabilities. So in an organization, of course, there will be common that there are number of assets as well as number of liabilities. Hope you are clear with the liabilities. Liability is nothing but the claim that has to be given to the outsiders is called as liability. Now moving on to the next one, debtors. So the next important accounting term is debtors. Now what do you mean by debtors? So debtors is a person who owes money to the business. That is known as what? Debtors. Suppose some amount that has to be given to the organization, or the organization has to receive some amount from somebody else is called as what? Debtors. Now, debtors is a person. Suppose debtors, let us assume it is an organization, is a person who owes money to the business. Who owes money to the business in the sense what? The person who wants to give money to the business is called as what? That is debtors. The person or the organization who owes money to the business is debtors. In the same way, what is creditors then? So creditors is a person to whom the business have to owe money. So creditor is a person to whom the business has to give the money. So here the business will give the money. There in the debtors, business will take the money. So here it is taking the money from some other person. That amount is called as what? Debtors. That is, the amount to be received is called as debtors. Here the amount to be given from the business is called as what? That is creditors. So creditors is a person to whom the business has to give the money. Next, goods. So let us see what is the meaning of goods. So goods refers to merchandise, commodities, products, articles or things in which the trader deals. So with whom the trader deals, that is called as goods. So it may be merchandise, it may be commodities, it may be products or articles or any other things which whom the trader deals is called as what? Goods. So in other words, they refers to the commodity or thing meant for resale. Now here if they use for personal use or if they purchase something for personal use, then it is not considered as goods. So here goods is nothing but the thing which is meant for resale. So here they have purchased for the purpose of selling it to others. So that product is called as what? Goods. Suppose if the organization have purchased this goods not for their personal use but in order to sell, that is known as what? Goods. Hope you are clear with the meaning of goods. Now let us see the other new term, that is purchasers. So other accounting term is purchasers. Now what do you mean by purchasers? Goods purchased by the business for production or sale is called as what? Purchase. So we have learnt about goods. So goods is nothing but the thing which is meant for resale is called as goods. Then what is purchase? Purchase by the business for production. So here purchase in accounting is considered as the purchase from the business for production or sale are called as purchase. So here also it is not used for personal use. So here something is purchased in order to produce the finished goods or in order to sell to others. So that is called as what? Purchase. And the next accounting term is sales. Now let us see what is this sales is all about. Goods sold by the business are called as sales. So the goods which is sold by the business are called as sales. The sale of the goods may be cash sales or credit sales. The sale of goods is recorded in the sales account. Now here also there are two types of sales. One is cash sales and the other one is credit sales. Now what do I mean by sales? I have told you the goods which is been sold by the business is called as sales, and sales can take place in two ways, cash sales as well as credit sales. Now what do I mean by cash sales? Suppose the organization have sold goods and they have received cash immediately, then it is called as what? Cash sales. So here cash has been received immediately. So here they have received the cash immediately. It is called as what? Cash sales. Then what is credit sales? Here the cash is not received immediately, but they are going to receive in the future. So here they have sold goods, but they have not received the cash immediately. They are going to receive in the future. That type of sales is called as credit sales. Hope you have understood about sales. So sales is nothing but the goods which is sold by the business is called as sales, and there are two types of sales, cash sales as well as credit sales. In cash sales, they have sold the goods and received the cash immediately, whereas in credit sales, they are going to receive in the future. And the next term used in accounting is stock. Let us see what is this stock is all about. So stock means the value of unsold goods and unsold materials in the concern at the end of the year. So what do you mean by stock? So stock means, so sales is nothing but the sold goods are called as sales. Then what is this stock? This unsold goods and unsold materials. So unsold goods and unsold materials in a concern at the end of each year is called as what? Stock. So stock includes the value of raw materials, semi-finished goods as well as finished goods. Now here the stock contains raw materials, semi-finished goods as well as finished goods which are unsold in nature. So it may be unsold goods or unsold materials. So this is about this stock. And the next term is profit. So we shall learn about various things here: profit, gain, expenses as well as loss. Now what do I mean by profit? The excess of revenue over its related expenses. So if the revenue is more than expenses during the accounting year, it is called as profit. So suppose if the revenue of the organization is more than expenses, then it is called as what? So this is called as profit. So if the revenue is more than expenses, it is profit. Now let us see what is this gain. An income that arises from the events or transaction which are not regular in nature. So you have to remember here, this is not regular in nature. For example, profit from the sale of machinery. So we are not going to sell that machinery often and often. So that profit what we get, that is called as what? Gain. Clear? So here profit is nothing but revenue over its expenses is called as profit. Then what is gain? The income or the amount which is received from the selling of a machinery. So the profit which is earned by selling of the machinery is called as what? Gain. Then what is expenses? The cost incurred by the business in the process of earning revenue is called as expenses. That is during the process of earning the revenue. So what are the expenses which is incurred? That is called as what? Expenses. Then what is loss? The expenses or the excess of expenses of a period over its related revenue is termed as loss. So if the expenses is more than revenue, then it is termed as loss. So these are the few important terms what we are going to learn, that is profit, gain, expenses as well as loss. So what do you mean by loss? The excess of expenses over its revenue is called as loss. Now let us see what is this discount. We all know about discount, right? So when we purchase something, so if the price is less than the actual price, so that is known as what? Discount. So discount is a deduction in the price of goods sold. For example, the goods value is rupees 10 lakh, but it has been sold at rupees 9 lakh. Then, so what it is called as? So 1 lakh is what? It is discount. That is the cost which is less than the actual price. That is called as discount. So discount is a deduction in the price of goods sold. That is, it is in the reduction of goods sold. So that is known as what? Discount. Now we shall see one more important term, that is Ochre. Now what do I mean by Ochre? I have already told you. While recording in the books of account, so each and every transaction should have a supporting documentary evidence. For example, as and when the transaction takes place in an organization, so it has to be recorded in the books of accounts, right? So while recording in the books of account, so each and every transaction should have a supporting document, supporting documentary evidence. So that is known as what? Ochre. For example, I have purchased a furniture worth rupees 10,000. Now, in order to record this in the books of account, that is purchase of furniture worth rupees 10,000, I should have a proper documentary evidence. So I should have a proper cash memo or invoice. So that supporting document in relation to a transaction is called as what? Ochre. So it's not just that one or two Ochre. For each and every transaction, there should be a proper documentary evidence in support of that transaction. So that is called as what? Ochre. Now, I can't simply record this transaction in the books of account. I should have a proper receipt, or I should have a proper cash memo or proper invoice where I have purchased a machinery. Then only I can record in the books of account. So that documentary evidence, that cash memo or that receipt. Now here if you can see payment Ochre. So this is also one of the important documentary evidence which is called as Ochres. So what is Ochre? The documentary evidence in support of a transaction is called as Ochre. So as I told you, for each and every entry there should be a proper documents which is called as Ochre. So this is about Ochres. My dear students, in today's session we have learned what are the important terms that has to be used while recording in the books of accounts. That is, what are the important accounting terms which is being used. See you all in my next session with a new topic. Till then, take care. Thank you.